Hello everyone, Jeff Fratarcangeli here for Fratarcangeli Friday Market Updates. We're doing a little different today. I'm doing it on Thursday evening because I'm traveling tomorrow. But I welcome you all to our bi-weekly update, which will start with earnings. Today and this week we had FedEx earnings that came out beating the top line by close to 4% and the bottom line by just under 2%. The cost-cutting measures that they targeted in 2025 have been met, and we're seeing some strong market performance from FedEx on the heels of some volatility as the markets have endured as well. Paychex earnings came out positive as well, beating on the estimate top line by almost a full percent, as well as the revenue number by just under 1%, which showing strong earnings growth, which is a strong indicator for the economy and unemployment. We think that is a catalyst for continued strong corporate earnings. We also saw Nvidia hit new highs this week after going down as low as 85 during the month of April, climbing back above its previous high of 149 and closing roughly at 155 today, Thursday. So we're certainly seeing the tech sector and the chip sector carry us again with the market within fractions of hitting a new high. As we sit here and look back over the year, we've hit lows of ranging between 13 and 17% declines in the market after hitting highs in February, and now climbing back here at the end of June close to a new high and surpassing February's high for the year. So a year of volatility, and those that have stayed the course and dollar cost averaged into their proper allocation, we're very pleased with where we're at today. And now we have to look out at some of the data that we've seen this week and the data that we're expecting. We saw the unemployment number hold at 4.2%, but tomorrow morning we're going to be watching for the ever highly touted data for the PCE report, probably one of the strongest indicators for where inflation's going. Of course, we heard Jerome Powell speak here over the last week, and he's going to speak again next week, and I know he's talked about holding rates steady, at least for the report that he's going to be providing. But we certainly see the inflationary numbers taming. We saw the unemployment and the CPI numbers all aligning towards slower inflation. And so we could anticipate by a pretty large margin by the end of the year seeing at least one rate cut. And we expect that to be well received by the market. But the fact that we have just had the 12-day war, we hope, end with the nuclear bombing sites of Iran by the United States, which is something that certainly created a great deal of angst over the weekend. But we opened the week very strong, closing for 3 out of the 4 days up over 900 points by the Dow Jones Industrial Average. So a very strong week, and one would wonder on Saturday night if we were going to see such a strong market performance. And here we are on the brink of new highs. But we cannot lose sight of the fact that the pause on tariffs that we expect to expire on July 9th for all countries and August 12th for China, we're looking for some signing of some of those deals and how that plays out. And I think the market is anticipating some good results there. But we certainly have to keep our eye on next week what transpires. We also know that we're working on the beautiful big bill that's being relooked at and would have to pass through the House and the Senate. I know there's a lot of eyes on how that plays out, but I believe there's a strong degree of confidence that they're going to get through these uncertainties, both on the tariff front and on the tax front. We are going to be keeping our eyes peeled for all the additional data coming next week, including the unemployment numbers for June. We also know Jerome Powell is speaking earlier in the week, and we also know it's coming upon July 4th holiday weekend for this country that we all love, and typically volume is very low. So I expect next week to be somewhat more reactive, if you will, in the market. If we don't have a lot of volume and there's any major news, it could cause a more drawn-out reaction, both positive and negative. I wouldn't put much emphasis on that, but we'll be coming back after the holiday with our focus on tariffs, our focus on debt ceiling, and our continued focus on the ultimate corporate earnings and the inflationary pressure or lack thereof. So I thank you all for joining me. Also tune in for our monthly market update that we did with Ron Insana. Many of you know him from CNBC, not to mention his strengths on Wall Street, Main Street, as well as Washington, and his feedback relative to all three experiences. We also had Bob Carey, one of the most respected chief investment analysts out there for First Trust, and I interviewed them yesterday for about 45 minutes. I suggest you tune in. You're going to hear some really positive things as it relates to technology and the impacts that we anticipate and the productivity along with deflation that we feel that this nuance of technology will bring. So stay tuned. We'll be back in touch with you, and have a wonderful holiday weekend if I don't talk to you, and know my staff is ready, willing, and able to help in any questions and anything you might need. Be well.